Welcome back to another Market Open live stream. Market opens in about 4 minutes, and oh man, let's see what's going on. So we got costs and Gamestop up, and I think pretty much the rest of the world is in the gutter, in the toilet, in the garbage, in the trash, in the house of pain. Look at this. We're so nervous about Mr. Jerome Powell crashing the market that here you go. You've got Microvision down almost 7%, Gevo down 6%, Sundial down 6%, EXPI 5.8%, SunPower's down, Churchill Capital down 5%, back under 30, Social Capital, Lemonade, lots of pain. Tattooed Chef down 4.4%, Redfin down 4%, Matterport down another 4%. Look at that, we're under 15 again. We're revisiting our cheap numbers. Under 15. Shift heading back to 850. Palantir also going down 3.4%. Where is it? It keeps jumping around. There we go. Back under $26. Etsy going back to $200. Everything's going back into the gutter because everybody's so worried about Mr. J. Bo. Look at this. Tesla 657 on Tesla. We got Moderna trying to breathe a little. Well, no, tried to. Never mind. That's from yesterday. It's also down 3%. Square's down about 3%. Peloton down. Coupon down. Airbnb down. Fuel Cell down. American Airlines. The recovery stocks are down. American Airlines. You know it's bad when tech and the airlines is down. That's not a good start. It's like, wait a minute. This is a very, very small list of green here. And those are some big red candlesticks coming in on Moderna. Woo! Today's going to be brutal. Today's going to be a day we basically just suffer through pain for the next 3.5 hours, closer to 4 hours, until Jerome Powell speaks. And then we either feel real pain or we go back to the moon. So I brought, well, I guess both, the rocket to the moon shirt or sweater here, just to hopefully induce some optimism because we need it, especially Plug Power. It's not good. It's not good when you misclassify stuff as R&D. That ain't R&D. You piss people off. And you know what I found? People don't like being pissed off. People just don't like it. So, that means we got some craziness to expect today. Now, look, Jerome Powell comes out and makes everything okay again. That's great. That'll be like a little bailout. But otherwise, I don't know. We might have another buying opportunity coming up. We'll see what happens. All right. We got about 40 seconds to go. Let's listen in to what the dudes are saying over here.
The vacation and pension contributions after a court ruling over there. Meanwhile, Jim, back here in the States, Webbush takes lift.
We got about 35 seconds until the opening here. Let's take a look for a moment at just GameStop's behavior going into the opening. We do have, it looks like we had over the last hour at least here, sort of a little bit of a run into the close or into the open rather. So that's exciting. We'll see if that continues. Okay, let's see what we got.
When I see any benefits given to any giggers, well, what I can say is that the gig people that's a bad model. You want to get rid of them and you want autonomous cars. But, Carl, this is not something that would make me want to buy at least Uber. Not at all. They can't. Right. They do well because they don't pay this stuff.
Some green.
Right, the driver's expensive. Guys, there's the opening bell and the S&P 500. At the big board, it's restaurant ordering technology provider Olo celebrating its IPO. We'll talk to the CEO later in the next hour. At the NASDAQ, it's Sun Country Airlines also going public today. CEO is going to join us in less than an hour. That's going to be ticker SNCY at the NASDAQ. Prices at 24, Jim. Range was 21 to 23.
Jeez.
We know there's a tailwind behind airlines.
I know, but this is the day that don't stick your neck out. Andrew Ross Sorkin with a very interesting piece today about how the airlines cleaned up, I would say, look, they had to pay the employees. That people felt.
All right. Let's go look at the sticks and let's see how things are behaving as we start. Okay. Oh man, I'm nervous to look. All right, here we go. So starting with the green, the classic GameStop running again. GameStop taking off about 6%. Looks like we've got a nice green start here to the day on GameStop. GameStop started with a little bit of a red candle here, but is actually nicely turning green here, starting to push. We just had a close here at 224. Definitely tried to push up, almost up 7% now. So possibly trying to break out here. We'll see what happens. Costs moving about 6%, but slightly red after the opening, up about 5.5. We're starting to see those red candlesticks. Oh, here's where the green is. You got JP Morgan after that Wall Street Journal article talking about how much cash these banks have. JP Morgan jumping up about 1.3%. Wells Fargo up 1.3%. Yeah, the banks really like that Wall Street Journal article yesterday. I'm assuming that's why we're seeing this movement here. GM, American Express, Clever's in this mix, or green at the moment. Let's take a look at it. There we go. Look at that breakout on GameStop. Now up about 9%. Here comes some momentum back. The ultimate hedge against everything. See if it sustains itself. Unlike Plug Power. Yeah. Oh man, that's not good. So Plug Power, just keep in mind if you're buying this one, because you're buying the dip. Remember, you're buying something that is a hydrogen play for the 2030s. You got some time to go, and you got to keep the market enthusiastic for I think 9 more years, and it's gonna be tough. The accounting change stuff, though. I suppose it depends exactly what ended up happening, but for right now, we got the Jim Cramer train wreck. That's not good. All right, we got look at EXPI. Wow, EXPI was up like 5%, 5%, 5%, 5%. Nice moves up, just really nice, solid moves up. And then what? Jerome Powell speaking? Gone. There it goes. Down 6.6%. CCIV down almost 7%. Look at that red candlestick. Let's see if it'll bounce right at our box like a little dog that just wants to behave within its box. Lemonade just fell under $100 a share as the Jerome Powell sell-off continues. Enphase back to 155. Redfin down. Let's see here. What else do we have? Invitae. See, I'm going to go back to the days here. Yeah, and this is what I think we're going to see here. Is a lot of this. Let's see how bad this red gets right here to play off our potential dip that we had here to create a maybe double dip. We don't want it, but we don't have a choice right now. I mean, look at this. NEO is sitting at $45, $46, fat and happy. I mean, maybe not fat, but happy. It wasn't like it was like really back up. And nope, back to $41. We'll be back in the 30s soon, depending on what Mr. J. Powell says. It's the reason I haven't been buying in the last 10 days. Here it is. It's that volatility we expected. I will say it came way faster than I thought. I thought we'd have a reprieve for longer than like 5 days. Tesla, 655. Crazy. We'll see what happens. Pinterest now heading down under 70, but not yet. It's at 71 right now. Hyliion's at $13. My gosh. Wayfair 305. Okay. Rocket Mortgage 24. Tattooed 2133. Dropbox back down, but still up. Actually, yeah, that's on the day chart. This is a pretty nice run we've had here at Dropbox. They had an acquisition. They did some layoffs, clean up the expenses a little bit. All right. Nano Dimension, Blink, Space, Twitter. Lots, all of these guys down 2-3% here. Whoo! And then we got like the single digit losers, but not a lot of gainers. I mean, very, very short list of gainers here. And it looks like costs now outpacing GameStop on these gains, though GameStop's still up about 7%. AMC trying to play catch up, but already running into some resistance. Carnival Cruise Lines is up too, though. All right, let's see what kind of yapping we got over here, and let's pull up the Bloomberg terminal too.
Unveiled last couple of weeks to varying degrees about how much they want those workers back in the office, but that has big implications for how many cups of coffee you're going to get at a Starbucks, for example.
Look, I mean, when you think about Salesforce, the largest tower in San Francisco being empty, that's a lot of Starbucks that doesn't get delivered, David, right?
Yeah, it is. It is. Listen, I mean, the providers of services to office workers in major metropolitan areas, it's been devastating.
Well, this is the New York issue.
It's New York. It's a number of other places as well. But yeah, of course, New York, given its office market, is by far larger than any other times 10. Yeah.
Okay.
Yeah, I mean, I went to 50. I was at 50.
Just getting the terminal up here, but let's keep services in the office market. Yeah, that's pain.
Just to try to deal with what my doctor says will be right. To a place called Walking Shoe. It's just fantastic. Closed. Just closed.
Yeah, there's no foot traffic, so why would you have a shoe store open?
Well, right.
They did open that block though.
55th and Matt?
Yeah, 55th and 56th.
Well, what happened to make that open?
Yeah, Trump, they opened it up.
I knew that.
I know you did. It was rhetorical also. I just keep answering your question.
All right, they're just bantering here. So, all right, I've got the Bloomberg terminal coming up. We'll look at the yields here. Yeah. Oh, man. Oil's down again, though. A lot of fear that gas prices are going to go back up again like it's 2008. Man, I mean, I have pretty vivid memories of like $5.50 gas. And I also have memories as a child getting 99-cent gas in Orlando, Florida. Anyway.
That's the status quo. If we just look at what's happened since COVID, since the end of 2019, you've seen an increase in the top 20% of households of about $1.5 trillion. It's actually, probably a little bit more than that now. The bottom, the rest have seen an increase of about half that, 0.7 trillion. So there's a ton of capital, but it's in a lot of places of households that are much more likely to invest in financial assets than to spend into the real economy. Now, the other part of that is that obviously the stimulus checks are targeted more at those low and middle income households. So we conducted a survey about 3,000 people. We asked them simply flat out, if you get a stimulus check this year, what do you intend to do with it across a few different categories? And when we compare those responses, both with historical data on those fiscal multipliers that economists tend to talk about, and with what people said they did last year, about half of people said they're going to save, even among the lowest income bracket. These are people who historically would be expected to spend all of those checks. So it's an incredibly stark contrast with what the historical data would suggest, all pointing to a much lower inflation impulse once you get past the initial enthusiasm of reopening.
So Matt, weigh in on this. Getting this call right on where this cash is and where this cash goes. Is it?
Yeah, keep that in mind. Look, if people put their money into Bitcoin, that's not going towards inflation and consumer prices, right? People put it into stocks. That might create asset price inflation, but who cares? That just makes everyone richer. Consumer price inflation is what hurts people.
Of growth and inflation in the economy, and then how it translates into their policy response, which I think ultimately is where we focus the most, because that is going to have the biggest ripple effect across financial assets that we're trying to forecast, John. And that's why when we look at the outlook for Treasury yields, we do see them going up a little bit more from current levels.
Yeah.
But when you look at what the bond market's implying for year end, it's actually above our year-end forecast now, and so it actually starts to make the bond market look slightly more attractive, John.
Matt, you and I are going to talk a little bit more about the bond market in just a moment. We're talking.
Okay, great. Let's get to the. I want to look at the charts and then the sticks here too. Let's see. Let's first start with the charts here. All right. Oh man, kind of nervous. Let's see. 10-year. I am so tired of looking at the freaking bond deals. I'll tell you, I am so tired of this stupid chart. Mostly because it's not good to us. It's like a little jerk. It's like temperamental. Oh my gosh. Yeah. See, this is all-time highs over the last year. And stock market, I ain't gonna be happy about this. And take a look at this here. Where's oh man. So about 3 hours ago, right here, big old spike. Oh, what pain. Look at that spike going from 1.64 straight up to 1.66. Woo! That's not good. Here, where's Jim Cramer's soundboard when you need it? Oh gosh, here it is.
The House of Pain.
Yeah, let's go to the 5-year. 5-year. Let's see, line chart. Oh, oops. I think I bought. Yeah, I did. Wait, no, that was right. Here we go. The yield on. Wait, what did I do? Oh, the 5-year here. Oh, 0.85. Okay, hold on. Anything over like that 0.75 is like is where usually it's like there's a line on the 5-year. Okay, well, actually, interesting. Hold on. Hold on. I'd rather go to a different chart. This chart's giving me pricing for 2026, and I just want the generic chart. Give me the 5-year, please. 5-year chart. There we go. This one's much easier. Oh, yeah. Okay. 3-day. There we go. Yeah, same kind of spike. Wow, almost went up to, yeah, I think we touched 0.86 here for a moment. Yeah, looks like we did. Jeez, right now at 0.85 exactly. Okay. Yeah, okay. I mean, Cost and GameStop apparently like rising yields. Not sure why, but they like rising yields. They love it. They'll take it because this is obviously the best hedge ever. Look, wow, a lot more went green here, I have to say. Look, when we opened up, how many of these were green? Well, we had, I think, like 8 stocks that were green when we opened up on our watch list. And look at this. Now we got like 3 times as many stocks that are green here. So a little bit more optimism. Let's look at some of these. Yeah, Nordstrom doing a nice rise here. Bed Bath, nice rise. BNGO, nice rise. We've got Norwegian Cruise Lines here. Good. Okay, so we've got some green coming out of this madness. And this green is well, obviously GameStop and Cost, because why not? And AMC. But the banks and the airlines now pushing out. They started a little negative. Right at the open, the airlines were a little poopy. And here they come. Not sure why Canoe is right here, but there you go. Where's CIIG? CIIG down about 1.2%. Not as bad as it was in the pre-market. Pre-market was worse. Tattooed Shift, pre-market was worse. A little bit of a recovery here. Some hope, with the exception of Plug Power. Also trying to get some green here. But look at Lemonade and Churchill. Both these guys selling off about 7%. AXPI down about 5%. Shift, Enphase, Etsy. Lots of pain in the tech and growth sector. As soon as we see those rates go up, sell all of these. Jeez. But not as bad as the open. Still trying to climb out of this. Now, it'll be interesting. We've got 4 hours before JPOW speaks. You know, today's the kind of day where you're like, look, if you want to trade, woo, you're relying on if you're holding, you're going to hold something through JPOW speaking, which obviously most of your portfolio should be buy and hold long term. But if you're going to do a swing trade and hold it through JPOW, whew, it almost makes you wonder if you want to hold a short position through JPOW speaking with how he's been a little fussy lately, a little cranky, complaining that nope, things are working as expected. Everything's fine. Really, JPOW? All right, let's look at the top here. So no real reprieve there on yields, just continuous new highs. Okay, on the top news here, talking about the accounting errors at Plug. We talked about those yesterday. Dot plot may back up Powell's patience. We'll see. We'll see. I broke down some odds yesterday. If you haven't seen it yet, check out my video on must watch before the Fed speaks. I got some odds there for us on whether or not the Fed's going to rescue us or not. And if they don't, I don't know. I don't see a lot of upside. They'd have to basically print more money for us to get some big old upside here. This has been a little painful here lately. So stocks decline, yields rise amid dot plot anxiety. That sounds so basic, but yeah, it's pretty meaningful. Matters. Ugh. All right, what do we got over here? Talking about the Dow?
That accelerator pretty much anytime they want. It's pretty brave of the market to challenge that notion. Now, housing today, the February numbers were not good. Okay, each down over 10% starts and permits, but permits really have been pretty solid even now that they've lost a bit, which really paints a better picture maybe for building and easing some of this supply issue. It's very tight supply. But I want to bring up something that came out yesterday. You know, that National Association of Home Builders Index was down for the 4th straight month, but it really brings my point home. Look at this. It started in 1985, and even with the downdraft at 82, it is still 4 points above 78, which was the all-time high prior to COVID. So there are bright spots.
Good old housing market chart. Rah, rah, rah. I'm a big fan of obviously the housing market, but whew, you know, we get interest rates go up percent in housing. You're gonna feel that pain real quick.
If you open the chart up to the second week in January, last Fed day marked the bottom of the low closes at 101. That was February 26th, 27th. And if you look at Boons on the same notion, you'll see that even though they've started up in January, they flattened out a bit. The difference between the two is widening. And finally, a month to date of the dollar index, which had a stellar month. And the reason why, you see 10s on top of it. Yes, this is like old-time trading. We see the dollar and rates moving in the same direction. That's the way it's supposed to be. Carl, Jim, David, back to you.
All right, Rick, thank you very much. Rick Santelli. So as we await...
Yeah, I will be live streaming Jay Powell. Remember, Jay Powell, we'll actually probably do an extended live session because we'll probably start at like 10:55 because we want to be prepared for when, and that's 10:55 California time. We want to be prepared for the statement release, which will come out at exactly 11, and we'll look at that dot plot, and then we'll panic together, along with seeing how the market reacts. And then Jay Powell will speak at 11:30, and he'll probably speak for about 45 minutes. And then we'll have left 11:30, 45. We'll have about 45 minutes left in the market at that point. And we'll see how bloody it gets then. Or, I mean, I don't know. I have a hard time thinking the Fed's going to come out and just double down on the money printing. I just don't think they're going to do it. And I think that's the kind of reaction we're seeing in the market too. Obviously, with the exception, of course, of GameStop and costs. I mean, these guys they're on their way to the moon. You can't stop them. Go EV. Nice push over 15 here. Staying stable over 15 too. Actually trading with the recovery stocks here. Pretty impressive. Big move here with the recovery stocks. Yeah, unlike the big moves we're seeing over here. This is just let's listen in for a second. Let's see if Barnes is actually talking about a red market or if he's talking about border crossings again or something. Oh, he's on TV commercial. Lucky we're gonna make fun of him. We just make fun of the content, not people. All right, what do we got over here? Okay, yep, that was definitely wrong.
Economy. And last week, what we got from the ECB. Just how wide is that spread going to be this year for you?
Yeah, John, I mean, well, ultimately, in terms of the policy spread, we don't think there will be much change this year, but clearly other markets like the longer ends of the respective sovereign curves are diverging, right? The spread between the 10-year Treasury and the 10-year German Bund continues to inch to new wide levels, John, close to 2%, 2 percentage points of spread differential between the 10-year sovereigns. And, you know, ultimately, to the extent that these fundamental issues continue to move forward as we project, we should still see some spread widening there, John. Now, whether it comes with interest rates moving up or whether it comes with interest rates consolidating and moving down is a different question, but we certainly still see scope for wider spread levels between the US and Europe. We're also seeing this, John, in the currency markets. The dollar has begun to perform relatively well against the euro, and that's a debate right now in the marketplace as to what extent does the outlook for the US continue to drive the US dollar
All right. So we'll focus here for a moment on specifically what's going on within some of these sticks here. So we've got Plug Power at 11.89% of a decline, trying to recover a bit here, which is nice to see some form of attempted recovery. But I don't know how well it's going. Churchill sold off kind of as the day opened up here. We're not down as much as we were here for a hot minute, but seeing some kind of recovery here. Let's see, trying to get back in its box. Lemonade's recovering a little. Okay, all right, here we go. Okay, some recovery. That's nice. Good, bouncing off 97 here. That interview with the Lemonade CEO, like, whoo! You want to get excited about the company? You got to watch that. Zillow Group, Hydro, Shift. Let's see, Moderna. Oh, Moderna, 4% now. This is more of a sell-off. Yeah, because Moderna started about 2% down, kind of moved straight down, and slowly trying to climb out of this little dip here. Looks like we may have had sort of a market bottom at 948-ish here. But hey, if there's one thing we learned over the last 3 or 4 weeks, it's these little fake out rallies are nothing to get excited about, especially when you got J-Pow coming out in 4 hours to just destroy everything. Very good food company. Get a little bit of fall here. Peloton, 440. Woo. Matterport, 1458. I mean, just looking at some of the pricing, right? Let's look at some of the pricing. Let's psychologically eliminate what's happening in the day here. Let's just look at pricing for stocks for a moment. All right. So easiest way to do that is, well, be nice if it would behave. Yeah. Okay, fine. That'll work. And I'll just sort by name. So let's see here. Pricing. Affirm, that's got to be below IPO pricing. I mean, $78. Yeah, it is. IPO day, they closed at $95. Look at this. This thing went down to $70. And right now it's at $78, rather. Not 75, $78. API back under 60. Back end there of Clubhouse. Airbnb is doing very well, over 200 here. Kind of trading with the recovery, guys. Amazon's literally been sitting flat at, somebody please guess. Guess, what do you think Fox Business is talking about? What do you think? Oh, man. We are literally on set of the border right now.
Remain as they claim asylum over there. But that's stunning.
I don't get it. Every single day, I don't get it. Amazon's been really trading flat. I mean, let's go to like the week chart here. Look at that flatness at Amazon. Also within these nice little boxes that we drew here. But I mean, it's been flat since July. If you held Amazon since July, you've literally had nothing. No performance for like 9 months, 8 months. That's crazy. All right, what else here? AMC at $13, AMD $81. Not bad. It's but AMD also hasn't really had a big breakout since about July as well. American Airlines, though, good. You see, this is where we're getting here's your COVID dip right here back in March of 2020. Look at this like bowl-shaped recovery. So everything like tech was like V-shaped recovery. These other guys are all like bowl-shaped recovery. It's interesting. Yeah. AT&T, of course, just a couple pennies under 30 because why not? Beyond Meat is actually heading towards where I prefer potentially buying the stock, which is under 120. It's at 136. That's some pretty low numbers. How low did it get in this last little crash here? Oh, it got to 125 for a hot minute. Darn. Canoe, Carnival, $28 at Carnival. Go to the week chart here on Carnival, and what do you get? Kind of that bull. Still some potential, obviously, at Carnival. If you try to get back to relative numbers, but then again, they've diluted their share count. $29 for CCIV, I like. I mean, under $30 is much better for CCIV for buying, but we want to see what the Fed does today, I feel like, before buying. Although, hey, maybe it is a buying opportunity now, but with how much uncertainty there is with the Fed right now, I don't know. 156 for end phase. That's cheap. Much, much cheaper, much more sold off than, for example, like Etsy at 206. And I love Etsy, but not as cheap as some of these other guys here. Wow, FRX is what I paid for it here, 1092. Nice little sell-off here. But trading more with Peloton than Recovery, which makes sense. GameStop 225, incredible. Just looking at prices, not looking at change for a moment here. Under 15 for Matterport's a bargain, in my opinion. G-Tech 67. Love talking to the CEO. Not a company I'm invested in, but was very exciting. Lemonade under 100. It's a little pricey, right? Moderna, I'd love to see a sell-off after they're done with the vaccines. Sell-off. Get me into some of that mRNA tech. That'd be great. Neo recovering a bit here, but under 45. Oh, juicy. Look at that. NGA back under 20. This is one we were thinking. It's like, no. When this runs, it's just consistently over 20. Now you're starting to see some of that pain come back. What else here? Starbucks 110, moving a little bit with recovery. Shift. By the way, tomorrow, be interviewing Shift. That'll be fun. So that'll be, I think, the first time we've actually heard a Shift on YouTube. Tesla 669. Hey, under 7. You just keep nibble buying this thing. I think it's great. Start getting over 7, 8. Then the returns start getting a little bit more subpar to where then it feels like you may as well buy something else. So, all right. Let's zoom into, or just look at the, okay, let's see. Hold on. There we go. Okay, so, wow, I don't know. All of a sudden, the very good food company here, big old loss. This is almost like news-driven because we've just seen this thing plummet here. Something happened. Let's see if there was a filing. No, not anything that I could see. So something happened here, but otherwise, a lot of this pain is just based on the anxiety over Jerome Powell. But we do have some nice green, some of these recoveries. Roblox, wow, $78. It touched 65 2 days ago. It's been up straight since then. Jeez. Okay, let's see what Bloomberg's got to say. Okay, TV commercial, fine. So then let's look at the yield. 1.6656. We are almost at 1.666. Whoo! Ay. Yeah, the plug talked about that a good bit yesterday, but it's not good if you misclassify R&D expenses. Pisses off people. You don't want to do that. Let's look at the top news. The suits are looking at. Whoo! Excuse me. All right. What are the suits looking at? The suits. I'm taking a peek here, and they're looking at Ford to let 30,000 employees remain at home. What are they doing at home? How do you have this? I don't understand. Maybe it's like customer service or what is it? But maybe engineers? Gosh, they're such a big company. 30,000 people at home? Should be on the factory line producing some EVs. Oh, man. What else? Ford, Credit Suisse, Plug Power, we read about. Astra, Fed's dot plot. We'll see. Let's see what they're saying about the Fed. While Fed Chair Jerome Powell has promised to maintain aggressive support of the U.S. economy, the central bank's quarterly economic forecast will show how many of his colleagues share his commitment. This is true. That's what we're nervous about. And that's what we're seeing manifest in the market here. Nothing new other than rising yield. Well, I guess that's nothing new at this point. All right, what do we got going on? Harley Finkelstein from Shopify will be on Mad Money tonight. Yesterday, man, CCIV, I don't know. They could have done a lot better, I feel like, on CNBC. I did not like yesterday's interview. So annoying. All right, what do we got? What's the talk over here? Let's see.
It's Alex, hugely anticipated Fed meeting.
Yes, finally. It seems like this is one that everyone needs to watch. There have been some boring ones. This is definitely not going to be one of them. Mission Unaccomplished is the name of my board because that's what we're probably going to hear from the Fed, particularly when it comes to, say, the dot plot. Maybe we're going to look for something about the supplemental leverage ratio. We'll get to that in a minute. And any kind of growth expectations. So the impact, higher yields, market really seems to be testing the Fed this morning. That means weaker tech, down by 0.8% if you're the NASDAQ 100. 30-year yield pushing higher, at one point hitting the highest level since 2017. 10-year break-evens also popping higher as well, at one point hitting the highest since 2013. The superlatives just kind of continue here. You get my drift. What's this mean for the dollar? It's turning into...
Yeah, we need more money printing from the Fed, because why not?
Center here. It's flat, but nonetheless, that 120 seems to be key. And I think the question is, how much higher can yields push? How much higher can the dollar go? And all of that then having an impact on other asset classes, Guy.
I really can't wait. It's going to be fascinating. It happens at 6 o'clock here in London, normally at 7. We've only got 4 hours really between London and New York this week.
So somebody says the 30,000 jobs at Ford are white-collar jobs. That's a lot of people. I mean, how many employees does Tesla have? Let's see. Tesla, how many employees? Let's see. And they got 70,000, but I wonder how many of them are corporate. The 30,000, that's crazy. That would be interesting to break up to see if we could find out how many employees actually work on the line. So I guess you got R&D as well. But then, and I feel like if you're an R&D, you're not working from home either. Just that's a big infrastructure.
But basically, you need 4 of those to go up. If you want to get up to around 1%, obviously you need 8 of them to go up. You can do the arithmetic here. But nevertheless, the summary of economic projections is going to be hugely revised. I'm watching these dots to see what the outlook is for 2023 for rate hikes. That could get the front end moving, Alex.
Yep. So let's get more detail here with Fed Decision Day. Mike McKee, Bloomberg National Economics and Policy Correspondent.
Oh, no. They said D-Day. Oh.
It's going to take a big change in the Fed's forecast. Now, remember, these dot plots are submitted in advance of the meeting by each individual member. So it's not really a forecast, though the market takes it that way. The forecasts come in the summary of economic projections, and we look at the median. And what we're going to be looking at is whether or not the Fed moves towards the market. Since the beginning of the, Biden administration, I guess you could say, when the stimulus became real, the $1.9 trillion. Look what's happened to the blue line. That's the Bloomberg consensus forecast for what growth is going to be, 5.5%. And now you've got people like Goldman saying 8%. The white line is where the Fed left us back in December at 4.2%. So they're going to come up. The question is, how far? And if they come up, what does that mean for their inflation outlook? Well, we'll get that answer from Jay Powell at his press conference. And here's what he's probably going to talk about: the fact that we still have a big hole in the labor market. We've got 10 to 12 million people who are still out of work. And even though we might see some...
Then print some more money and save us, will you?
Shortages of materials or from higher energy prices, we are not going to see a long-term inflation problem until that closes, that hole in the labor market closes. One other thing we're going to be watching for today, the supplementary leverage ratio. This is a complicated issue, but basically...
I covered all this yesterday.
Have to hold more capital against their assets. And when the assets at this point keep growing because the Fed keeps buying treasuries and putting money into the bank's coffers, and the stimulus money puts banks deposits up higher, banks then say they can't afford the higher capital ratio and they would like some relief. The Fed suspended it last year. Will they do so again? That's the big question. We may get an answer today. We may not.
All right, Mike, thanks a lot. Super appreciate it. Bloomberg.
They're going to milk the clock on that one. Oh, man.
Inflation debate that seems to be dividing the markets. And this is a really interesting chart. It takes a look at the spreads of the difference between 10-year break-evens and 5-year break-even rates. So the long-term versus short-term inflation. And the lower it goes, the more the short-term inflation break-evens are moving higher. And that's exactly what we're seeing as it slips into negative territory. It basically means the market thinks that the Fed can actually control the short-term inflation picture, feeling more positive about higher inflation. But the longer term then is still a significant issue. Let's break this down even further. Joining us now is Nathan Sheets, PGIM Fixed Income Chief Economist and Head of Global Macroeconomic Research. What does the Fed do about that, Nathan?
Well, my guess is that Jay Powell didn't get a lot of sleep last night. As you said, this press conference is a very big deal.
Yeah.
And he's got some thorny communications challenges that he's got to address.
He's been very fussy lately. Like, people get very, like, he'll say we're not worried about inflation, and people are like, he said the word inflation.
Consistent with their dual mandate. But if it happens too rapidly, that can jeopardize the attainment of those goals. And so they do care about pace as well as level of treasury yields. And then
yeah, all right, let's take a peek at the sticks again. Let's go. We'll come back to Bloomberg here. We could actually, by the way, I learned we could pull up the charts, which I think is really cool. Look, this is the chart that we just had on Bloomberg here, and we can play it up and play with it, or pull it up and play with it rather. Has never been this negative. The spread between the treasury break-even points has never been this negative. That's fascinating. So they say this is the spread between the 10-year and the 5-year break-even. She had a good explanation. But wow, okay. We'll take a, let's see here. Arkansas forecast. Yeah, we saw this as well. This was another one they were just covering. The forecasts. So this is GDP growth. So this is what the Fed thinks in terms of GDP growth. They actually decline or reduce their estimate in the summer here from 5% to about 4%, then up to about 4.2%. The big thing is, and this is totally right on, and I'll show you where we see this. Kind of covered this in the video yesterday, but let me just briefly pull that up. This is the form we're going to be looking at later, and we want to really look at these lines right here. Is the Fed going to bump their GDP predictions? And if they bump their GDP predictions really fast, then people are going to think, uh-oh, the GDP is starting to align with the market. So the market thinks we might see 5.6% GDP in 2020. I'm sorry, 2021. If this Fed forecast jumps from 4.2 to 5.6 or whatever, whew, it's gonna be so bloody in the market. It's not gonna be good. Yeah, it's gonna be interesting. I don't think they're gonna jump to what exactly the market is expecting. But look, we've been riding on top of market expectations for a while. It just wasn't until the last this last little crash here since February 19th ish that we've had these expectations all of a sudden adjust upwards. Just the market's just overly fearful right now. But okay, so what do we got going on here? So Plug is getting worse-ish. Lemonade is recovering slightly. Churchill, slight recovery. Okay, so we got a little bit of a recovery. Nah, API is still doing rough doing, so roughly. Palantir under 25 again. Oh my goodness. Where is Tesla? Let's see. Oh, Tesla's actually not as bad as it was. We hit 651 for a hot minute there, and we're at 670 right now. Wayfair 313. Hey, we had a recovery here. I have to say, we've had a recovery over the last 30 minutes, 35 minutes. Had a recovery. And it's still painful here, but let's go back to these dudes.
Well, many Americans seeing $1,400 stimulus checks in their accounts this morning. Small businesses awaiting more relief as well. Lendistry is a Black-owned hybrid community bank and a fintech operator administering $2 billion of COVID relief grants in California. Everett Sands is the CEO of Lendistry, and he joins us now. Everett, thanks for being with us this morning.
No, we're not going to talk about California stimulus. So let's go to top news for a second. Top news. Okay. Tech declines, yields jump. It's no surprise. Let's see here. Complaints about unprecedented border issues. VIX futures 20% above history show jitters linger. Let's look at the VIX. It's actually a good idea. Yesterday the VIX was pretty low. All right, let's pull it up. Looks like we're under 20 still. Nope, 20.67. A little bit of a bump here in the last. Yeah, there we go. A little bit of a bump. Not extreme, though. I mean, if we go back to that pain we were feeling, that March, first week of March, last week of February, this is the pain we were feeling then, these higher figures here. And we went as high as 28, 29 on the VIX. Not so bad right now. But we'll see. Oh, here's just so you can see it a little better. We'll see what happens. Okay, let's jump on over here. Let's see what they're talking about.
Of thousands.
Oh my God, they're talking about the market.
Starting this summer. So that's some big competition for Teladoc. Now, tech is falling today, yes, but on the flip side of this, a counter trade, banks, airlines, reopening plays continue to rally. They are outperforming growth by 10 percentage points so far this year in this rotation from growth tech to value instead.
All right, Susan, here's our chance to get technical and detailed and oh so professional.
Yeah.
Goldman Sachs says cyclical stocks are outperforming the general market. What does that mean?
We already know that.
We're always professional, by the way, Stu. So we just highlighted the reopening winners. Those are cyclical plays, the ones that benefit when the economy does well. Banks, energy, travel, industrials, and some have called this outperformance a dash for trash. Now, Goldman Sachs says actually that's not the case because there's more upside in these stock winners, and they will eventually catch up with their.
That's what I'm talking about. Oh, that is a good line. Oh, I like that. A dash for trash. Look, don't get me wrong. If you're making money off the recoveries, you got a balanced portfolio. That's smart. You know, nice. You know, you got some in tech and you got some of the cyclical recoveries. Or cyclical and recoveries, depending on how you prefer to break up the few. You know, some throw recovery in with the cyclicals. Some think they're one and the same. Whatever. But the point is, you know, hey, some of these companies heavily indebted, a lot of share dilution. So be careful if you're comparing the charts of where things used to be to where they are now. We don't necessarily have to go back to where they were. Just because the market's reopened. And that's because there's so many more shares outstanding right now. It's so many of these recovery companies.
I mean, they're not baby boomers. A lot of them are millennials with their emergency unemployment checks, et cetera, et cetera. Got to move on, Susan. Sorry about this. The White House hitting the road to sell its COVID relief plan. Vice President Harris says they're not selling it. They're explaining it. Watch this.
It's not selling it. It's literally letting people know their rights, right? It's kind of like you buy a product, you've already been sold on the product, but you need some directions on the box.
Okay, it's so complicated they need a national tour to explain it. Tennessee Senator Bill Hagerty.
I mean, I'm not going to get political here, but you know, I feel like if Biden did like a daily stimulus update live stream answering Q&As on YouTube, it'd be a little more productive than traveling the world or the United States to talk about the package that's already passed. Or like send flyers to people in the mail. Like, did you know you could refinance your EIDL loan with the PPP and then get it forgiven? You know, like just send people a little mailer or an email. I don't know. Yeah, and that's not to be political. I was just, when I first heard it, I'm like, really? Travel to the United States? I feel like we've already been talking about it a lot. But, hey, all right. So, all right, what do we got here? We got Fisker. Wow, nice looking chart here on Fisker. Nice trend upwards here. Let's see here. Okay. Nice trend up here on Fisker. Fisker's pretty low right now. We got Clever at up about 3% here. It's the first time we've really seen Clever up in a little bit. We've got Cost and GameStop settling down a little bit, slowing down on that run. Look at Dave & Buster's. I mean, what a beast. $46 almost. My goodness, what a recovery. Spirit Airlines, what a recovery here as well. Let's go to the day chart just for a moment. Let's go to the day chart on the airline here. So we got the day chart out. Yeah, I mean, here's 2021 right here. From right here, this mark right here, boom. Nice 2021. And really since, since November, just the recovery stocks killing it since November. Can't fight these recovery stocks. All right, what else here? Unless, of course, you're just buying the dip of all the techs. Still want to know what happened at very good food company here, but CCIV trying to stabilize here. No, not recovering anymore, but stabilizing. Enphase, Lemonade, same thing. Microvision down. Microvision, though, still doing good. I mean, it's at 16.21. Under 25 now for Palantir still. A firm under 80. Okay, so most of these things staying pretty stable here. Let's pull Tesla just for a moment. Tesla. Wow. Tesla went green? What? Wow. I think there's some optimism leaking out of the Fed here, maybe. We'll see if that ends up holding true. All right, let's look at the bond yields. Let's see if that's what, maybe there's a reversal in these bond yields. Not really. See, and that's what I'm saying. You get like sudden spikes in bond yields and the stocks sell off. And it's like, oh, there's the relation between bonds and stocks. Then stocks start going up and bond yields aren't necessarily going down. They just stay up. I don't know. What's this market alert?
Versus most of its U.S. competitors. Joining us
Sun
now.
country. I've never heard of a country called Sun. Just kidding. Airline. Yeah, okay. And then same thing here with the 5-year. Okay, a little bit of a decline here, but still well up. All right, top of the news stories here. Samsung warns. What was that with Samsung? Hold on. Chip shortage again here. Samsung warns of severe chip crunch while delaying key phone. Ooh. Yeah, it's like impossible to buy a graphics card to try to buy a computer or build a computer right now. It's nuts. Yeah, I mean, you're paying like 4x for some crappy chips, or even the good ones. You're paying crazy price. So, yeah, look at this nice little Tesla rally we've got going on here. I don't know whether to be excited about this or if J-Powell is just going to come in and ruin all this. It's hard to say. Let's see. Okay, here. Trivago's back up. GameStop's up. CIIG up nicely here. Arrival, good recovery here. 3% on the day. Nice move up for the Arrival SPAC. There was some good news about the United Kingdom and Arrival. Let's pull it really quick. Let's see what it was. Arrival SPAC. United Kingdom, some kind of partnership or something. Yeah, let's see. Oh, I don't have it here. I saw it this morning. Now apparently I don't. Arrival news. Nope. 7 hours ago. Nah. Whatever. Oh. Right, because people are like, why is it saying what to know when traveling to the United Kingdom? Right, or because I wrote whatever. Anyway, good news coming out about Arrival, the SPAC, some sort of partnership. I don't know the exact details, but I saw something on that. So what else we have here? Volkswagen, wow, running again. And look at that spike right here at the market open. Another 10% up here. People getting really excited about Volkswagen's discussion, about the future of their electric vehicle plans, their battery operations. They projected 2030 battery capacity, manufacturing capacity at 1/4 of what Tesla is projecting. But people got really sold on the idea of Volkswagen over the last couple days. I mean, fine. Look, hey, more power to the EV sector. I mean, literally, the more these go up, the more power you got in the EV sector. But I don't know. After the ID3 headlines that we've seen, and the issues with it, I think they go a little deeper than the issues we had with Tesla in the early days. We'll see. Recovery's still trying to occur here. Churchill Capital still trying to recover here a bit. Enphase, really slow kind of recovery, but trying to see it here. Peloton looks like it's recovering as well. So is EXPI. I mean, EXPI was down, 7% for a brief moment there. Now only down 3%. Still down, obviously. Look at the greens, though. GameStop just really failing to have a consistent push here today. But GM, AMC, all up about a couple percent. Roblox, Boeing, now we're at the 1% category. Tesla going green. Very bizarre. I mean, we thought this was just going to be a pure recovery day in terms of where recovery stocks do well. But no, Tesla deciding, oh no, we're cheap. Coming up about 0.6% here. American Air, Dave & Buster's. Dave & Buster's. Oh, I love I cannot wait to take my kids back to Dave & Buster's. All right. California is just a little tougher. Plug. No love for Plug at all. Oh, not when you change the numbers on us. People rely on those financial statements. Can't come out and tell us they're wrong. It's a problem. Okay. Plug Power rocketed by accounting error. Yeah. Accounting error or stupid accounting. Those could be two different things. All right. Let's see what we got here.
Our allies in the Middle East, and I think we ought to take that into account. We need to take into account our
they put a chart up about big tech, but no, they're talking about the Middle East. This is just an extension of Fox, not business. All right. What do we got over here? These guys are usually all biz.
Dollar kind of circa 119. It's going to be interesting to see what happens. Nathan Sheets, PGIM's fixed income chief economist. This is Bloomberg.
It's a cool set. I got to get myself one of those. Just like those standing podiums. Actually, I want it to be on like a rotating thing, so that way I could do you are the weakest link. Oh my gosh, who remembers that? Oh dear. I don't know why they canceled that show. I mean, I imagine it was probably because of ratings or something, but I don't know. All right, nice decline here. Look at this nice decline here in the 10-year Treasury here, 1.65. Nice decline in the 5-year, coming just under 0.85 again, so that's good. I'm not a boomer. What is the weakest link now a boomer thing? Okay. Now we're talking about Gavin Newsom on Fox Business. Oh my gosh, it's just becoming a running joke at this point. Yeah, I don't know. No, let's look at Tesla. Let's look at Tesla. Where's good old Tesla? So Tesla, where'd it go? Here we go. A little bit of red candlestick here again, but gosh, we had 651, nicely up off that. Good recovery here. We'll see what JPOW does to us today, but it's the market wants. Here's the thing: the market wants to go green. The market does not want to be down 2.6% of Walgreens. It doesn't want to be under 25 per pound here. It's just looking for. All we're asking for is that even a little selfie of JPOW with the money printer. Just an update that everything's going good and going according to plan, and that you want to print some more money. Yeah. All right. What we could do is, I really like the charts. Oops, that they use over here, and we can pull these guys. Let's see what kind of fancy charts they come up. Problem is sometimes they come up with such fancy charts. It's a little tough to digest exactly what they've got in the chart. Okay, so Fed funds futures begin pricing in earlier tightening. Okay, what we got here? So here's where we are now on the right in terms of what expectations are for futures. Yeah, you got like this sharp increase here. Yeah, that middle of February. That's really where we saw this adjustment of pricing in potential inflation. Here's the 2021. Nothing here, but 22 and specifically 23 really starting to price in those higher rates over here. Yeah. Okay. Oh, NFT art boom. Now they're actually talking about business?
We've got a report on this, if that's what you want, coming up for you. Look at this. President Biden walking off Air Force One.
How do we go exactly? We were literally like, oh, let's spend 10 seconds talking about business and then go back to Biden. Oh my gosh, he didn't talk to the press. Coming up, he did not talk to the press. Really? That's the coming up headline? Biden gets off airplane, does not talk to press. Oh, please. I need shots. Okay. Commercials everywhere. All right. Let's what about Bloomberg TV? Bloomberg TV going to take care of us? Let's see. Maybe.
Even if demand picks up, OPEC has plenty spare production capacity, like oil in the ground, to get it out quickly if there's a resurgence in demand. Also talked about the fact that you'll see oil demand recover, but it's going to take till 2022. And even when it does recover, it won't have the velocity that it might have had in other cycles.
Yeah. The thing about this is that a lot of people seem to be predicting a super cycle. A lot of banks have been raising their targets, maybe not going quite as far as the super cycle, but certainly suggesting that we're going to see significantly elevated prices. Like this chatter around kind of 80, 90. There's a lot of cold water here.
Yes, and also when it came specifically to gasoline demand, just sort of threw cold water on that, saying maybe gasoline demand at peak. That would be huge, particularly when Exxon and Chevron are like, guys, oil and gas, we're going to need it for the next 10 to 20 years. That debate evolving in the oil market and the commodity market. Otherwise, lumber, copper, all of that tying into the housing market. We'll talk about the supply chain issues as Guy was just talking about in just a moment. This is Bloomberg.
Okay, let's see. Go to top stories for a moment. Let's see, I mean, I think honestly, like the top story of the day here is almost solely Jerome Powell. That's everybody's just waiting for Jerome. Otherwise, I don't think we really have some big stories here, except for the Uber defeat. That was bad news for Uber in the United Kingdom, requiring their the people working for Uber to be employees. I don't understand how they push that through. You know, it seems so obvious to me that it's like self-employed, like gig style work. You know, that's the whole beauty, is that you're not like on a salary. You can do it whenever you want. You can do it however you want to do it. I don't know. Be interesting to see what those arguments were, but oh well. So let's see. What should we? I need some title suggestions for our video later, and then we'll look at the sticks here. For 10:55, I'm just scheduling it. Fed statement, and I don't know. Jerome speaks. Jerome Powell speech. Sure, we'll just go with that. So that way you could click the remind button later. So that way you make sure you get that notification. But anyway, yeah, you want to be there. You want to hit the remind button on that one, because you want to be there for that release. Here, I'll link it here really quick, just so that way hit the remind button. Yeah, because you're not going to get a notification. But if you go to what I just linked there, I don't know if you could click that. Let me see if I could do something else here. Let's do. I can make a short link really quick. Okay, go. So type in MET, not meat. I know that's weird and confusing. Okay, but type in metkevin.com/FedSpeaks and click remind on a new tab on that video there. And yeah, metkevin.com/FedSpeaks. Click remind on that. All right. Yeah, exactly. I do think that's potential here, that the UK is really signaling what could happen in the future of the United States. Should I opt out of the monthly child tax credit monthly payments if I already have a W-4 configured so I don't get a refund? Yeah, you possibly, because otherwise, unless your refund would put you higher. Yeah, that's a really good question, because it depends on how much money you make. I'd have to think about that one. I'll get back to you.
Started to go up right around the 220s. So my feeling would be that if you want to know the next area to pay close attention to in treasury yields, everybody's going to be looking at 2%. I couldn't agree more. It's big, it's psychological, and a nice round number. And probably we get there when we pull back a bit. But think about how much damage gets done when you go up to a little bit more of the 220 and really get many traders off sides. I like to take those long views. Now, let's continue with this topic of back to the taper. And as I'm talking, consider this. Look at a chart going back to the first week in January. The Fed meeting was the 26th. And we see what happens with rates. They basically lift off. They don't go back after that 101 close. But there's something else that's going on. Who's the Treasury Secretary right now? Well, Treasury Secretary is Janet Yellen. Who succeeded Janet Yellen as head of the Fed? Chairman Powell. Okay. Now, let's talk about Fed independence here. Is it at risk? Many traders I talk to that are nervous to sell into the 120 billion residual quantitative easing, 80 billion on treasuries, 40 billion on mortgages, because the Fed could easily touch that pedal again. And think about it this way. Chairman Powell, in his last couple of meetings before we got to the vote, the 1.9 trillion stimulus, I think said something along the lines of he never would explicitly back various legislative policies or various bills, but he really did all along just egg the government on to do more. He believes that's what we need. Post-COVID is more stimulus. But in the end, the Treasury is not going to do all this, and the Fed isn't going to do all this just to put up the white flag. The Wall Street Journal did a great piece earlier in the week about how the Korean War brought similar dynamics between the Treasury and the Fed, but they had to break that relationship in order to get confidence back of Fed independence. So maybe at this point in time, the Treasury and the Fed together are really promoting spend, spend, spend today. But the rest of the market is starting to be a bit concerned of the consequences tomorrow or ahead. Morgan, back to you.
Rick Santelli, thank you.
I don't know. I mean, I know the Fed's been spend, but hey, look, lately they're kind of like, oh, no, we're on the right path. We're good. We don't want to spend more than we are. It's kind of like every month you get your routine. Every month you spend, $4 on a coffee every day. Costs you $120 a month or whatever in coffee, because I don't know, maybe get a latte or something like that. And it's like, do you want to get a scone today? No, I don't want to add. I just want to stay consistent, which is kind of weird. Like, we're kind of getting mad that the Fed is being consistent. But yeah, that's kind of what's happening.
How much people are going to deposit? They say those were available before stimulus rolled out. Analysts tell me that these direct deposit relationships are really the ones that fintechs care about. If they can get people using their apps for this one-time check, they will likely come back to deposit their paychecks down the road.
That is exactly why those fintechs fronted those stimulus checks sooner, which, remember, the reason we extended the course coupon for a few days is because Wells Fargo and JPM, they're not advancing those stimulus checks. So those are coming in today. Those are coming in by Friday. So, you can still take advantage of that coupon code. But as soon as those checks come in, just in fairness to those people who are waiting for those, the coupon code will actually expire, and then the prices will go up. All right, anyway.
Saying that the banks are, quote, holding their stimulus money hostage. And while it's possible to save on these apps, Robinhood and Square both offer trading. And according to estimates from Mizuho, as much as 10% of stimulus could go into stocks or into Bitcoin.
Oh, no, it's way more than that.
Exactly where I was going with my question for you, Kate, is yes, I get that it can make it a stickier situation in terms of future deposits, but also you got to think some of that stimulus money is going to go into some of the other services that these platforms like Robinhood offer as well.
Yeah.
We've seen that, right? They've got direct deposit as a way to sort of give people access to put their money right into stocks. And it's similar to what someone like Charles Schwab might do with a cash management account. But we have seen this in the past in former rounds of stimulus. We've seen it go to the markets. There's been multiple analyst reports out about this. And the expectation is that at least a portion of this will go into some sort of stock trading, whether it's Bitcoin or equities, especially when interest rates are so low.
Hey, Kate, I guess to what degree are you on the lookout for changes in marketing to either existing consumers or new consumers, as these companies have full knowledge that these would-be clients now have a little bit more money in their pockets?
It is a huge customer acquisition channel, and these are sometimes the customers that they would be going after. Chime, for example, has made its entire business model based around going after sort of the average American who might be getting this stimulus check. They have done a huge rollout. SoFi has done it in the last round. So we've seen this playbook before in terms of this being a profitable customer acquisition channel in terms of giving people access to stimulus when they really need it.
keep in mind, that's very, very important as well for a stock like Square. Every time the stimulus checks have come in, Square has done very, very well. And once you get people into the system, you know how easy Cash App is as a cash management software. Whew, it's good, especially since they're coming out with a credit card. Got a banking charter. It's going to open them up to more lending. It's going to be competition for SoFi. Woo!
On a pretty big day for media names, as we see some of them struggling here in this tape.
Michael W. asks, do I think CCIV can actually be a thing with Tesla, Volkswagen running things? Volkswagen's not running anything. Volkswagen's good luck. And look, I want Volkswagen to succeed. I like Volkswagen. I really like the Audi TT. I love the hardtop convertible, the EOS. Those, I think they're phenomenal cars. Lauren had a Volkswagen Bug, a convertible. And look, I love Volkswagen, but do I think they can transition as well? Well, to companies that don't have to transition at all to EV? No, I'm concerned about their transition. We'll see. I mean, they gave us a lot of hype, but I'm worried that that's all we're really going to get is lots of hype. So we'll see what happens. You know, if we get if we actually get execution or not. All right. So going back to some of the sticks here. Let's see what we have here. So Plug continuing to decelerate here. Let's see here. Plug decelerated or declining, advancing again towards the negative. Lemonade bounced off 100 here. We had a little bit of a recovery and just slowly deflating. It's like a slow deflation there of Lemonade leading up to JPOW. CCIV almost went back to its top box line here, or actually broke above it a little bit, excuse me, and now sort of back within the middle of its box. Always behaving in accordance to that box. EXPI, Microvision, down 4% here on Micro, Enphase, 160. This is just, honestly, a bargain. Tattooed Chef at $21. Walgreens at about 53, about down, both of these about down 3.6% today. Etsy's down 2.9%. It recovered a tiny little bit. We had a larger recovery, sold again a little bit. Just too early for me to buy. Like, I think if this Fed chair talk goes poorly, I don't know. Well, I think the bigger question is, when are we going to see the most damage? The second part of today or tomorrow, when people are like, really? That's how the Fed's going to do us? That's what they're going to do? So we'll see. Costs in GameStop, not really running at all. And this is why it's been so hard to try to pick a swing trade. It's really just been a matter of buy the dip when we get some serious dips. Those are some of the best swings right now, it seems like, which we've done a lot of, and we'll do more of if we get another revisit here to the dip bowl. All right, let's see what we got. Let's see what they're talking about here.
Strong. James Hardy Industries CEO. What have we got coming up for you next? The chip crisis. Samsung, the latest to sound the alarm. The shortage could delay the launch of its new.
I like how he wore a green tie for St. Paddy's Day. It's actually, like, I was thinking about it this morning. Like, should I wear something green? And I'm like, what was I doing? And then I came here. So in other words, no, I didn't get anything green. I didn't even get a green coffee mug. And I had one too. I'm like, I should get a green coffee mug. And like, no, we need the skull today. The skull for 99 Slayer. Yeah, because you're gonna need you. No, maybe I should have gotten the heart. Or that's later for hit points.
Manufacturing levels at where they were. And now what we're seeing from Honda is an announcement that came out late last night that starting next week, it will be suspending some production at some of its plants here in North America. That'll happen next week. For how long, the company is not saying. How many vehicles will be pulled out of the regular production schedule? That's unclear at this point as well. In a statement, the company said, we continue to manage a number of supply chain issues related to the impact from COVID-19,
Read into that absenteeism, congestion at various ports, and the microchip shortage and severe winter weather over the past several weeks. That last part, the severe winter weather, that has to do.
This whole chip shortage is nuts. It's probably also not good for some of the EV plays. Fortunately, like Tesla, for example, they make their own chips. But let's see here. Put your green shirt on, the market might turn green. Hey, maybe. I mean, look, if the market goes green, probably, if we get some real good green, there might come a moment where I decide to start selling some of my lower conviction stocks just to really be ready for another dip over the next few months as we continue to see this inflation volatility and these inflation expectations getting priced into the market here. What is this here? Look at this. I did not know. Robinhood. Traders on the brokerage platform can get account credits ranging from $10 to $200. Or from $10 for a $200 deposit and $250 for a deposit of at least $15,000. I did not know this. Robinhood Cash Rewards Program. Wow. Okay. I don't know who wants to move over to Robinhood. All right. Let's look at volatility. So volatility on the day. Let's look at the day chart for volatility. Declining. Nice decline here, as we are now about. What do we weigh? 3 hours, 4 hours. About in 4 hours, Jerome will be speaking. We'll be covering it. We've got yields settling down a bit. Still higher. 1.65. We're not as high as that 1.66 craziness that we saw this morning, but still higher. Why is pound or somebody's asking why plugs falling? Yeah, because they're saying they're redoing their financial statements for like the last 3 years. And one of the reasons is because they misclassified research and development expenses. Not good. GameStop giving away its moves here. Market pretty flat in the greens. Lemonade's accelerated declines here. Churchill Capital also some big red candlesticks all of a sudden here. Yeah, some big red candlesticks across the board. Everything's red candlesticking again. Here we go. Does that mean Tesla went red? Let's see. Yeah, so again, to clarify, Jerome Powell's, the Fed will be releasing a statement at 2, which we'll be covering. And then at 2:30, Jerome speaks. And that guy is not late. That guy's on it. So, yeah. Yeah, you got to be careful. I got a lot of questions about warrants. You got to be careful about warrants. You got to be like an expert at these because they come with sometimes conversion rights for the company. You got a fee that you have to pay when you convert. So oftentimes when you see a discount on warrants relative to the price, it could be a little fugazi. It's not necessarily a discount based on the risk that's involved in them. So what happened to Skills? Skills all of a sudden just gave up here. And FTCV really selling off. This is eToro. eToro selling off after that crazy run we had yesterday. Wow. Yeah, big run yesterday. Selling off, not to lows of yesterday, where it was around 11.79. But, yeah, 13.17. Definitely selling off some of that enthusiasm. And we're seeing that across the board, this sell-off of some of the higher growth companies. Definitely seeing red candlesticks just here within the last 5 minutes here. Some big red candlesticks coming back across the board. Everything's turning more red right now. Microvision selling off, Roots selling off, Gevo selling off, EXPI selling off, Churchill selling off again, Lordstown turning red. Are the recoveries going red as well? Let's see. GameStop going red. CrowdStrike, Trivago going red. Everything's going red again. Liado. Let's see what's green. Gosh, yeah, even GameStop. Look at the red candlesticks. Here we go. Everything's just going down. Everything's going into the gutter. Ugh. Ah. All right. Let's see what Barnes is doing. Okay, is this politics again?
Troops that were already stationed and working.
Back to the border crossings again. God. I'm not even going to comment anymore. I'm just going to laugh and then change the channel. All right, let's hear about the chip crunch.
Percentage points of volume extra. And that's going to have to do, that's all we've got in the near term, right? And we're going to potentially expand CapEx through the next cycle so that our production capacity of these factories is 20, 30,
Congrats, Bruce.
more come the next cycle. And that's going to come 2 years from now, 3 years from now.
Wow.
In the near term, we're going to have to add 10% extra capacity of these factories, run an extra shift maybe, and find Band-Aid processes to deliver that extra oomph of volume that demand is now demanding.
And there's been a lot of talk about the fact that regions are suggesting, like the United States, like Europe, they're suggesting because of these supply chain problems that we're having at the moment, that they need to have local supply. They need to have fabs in the United States and they need to have fabs in Europe.
Tell you, the biggest areas for chip supply are, what is it, Taiwan, South Korea, and China. These guys like own the chip market. Wafer production, the inputs, everything. And don't think Nano Dimension is going to come to the rescue 3D printing our way out of that. It ain't.
Increasingly concentrated our chip manufacturing in the Taiwan sort of basket. And as a result of that, when crises like this happen, you overlay the geopolitical issue on top of that, and it just shows you how vulnerable our supply chains are. And in the long run, what companies are starting to do, Apple and other manufacturers are trying to diversify their electronics manufacturing chains away from China into Vietnam, into Thailand, into Indonesia, and into India. And from a manufacturing perspective, Intel is going to be front and center in this, in that let's move our chip manufacturing supply chain away from Taiwan, or at least de-risk that a little bit. And
why?
The US and Europe are going to play an increasing role in that global.
Well, I see. I guess they want to diversify so we don't have these supply chain issues, but just, there's a lot more demand.
Because you're still reliant on Korea Inc. and Taiwan Inc. for that advanced chip supply.
It really feels like it's spreading to so many industries. Anand, thanks a lot. Love catching up with you. Anand Srinivasan of Bloomberg Intelligence. All right, coming up, Bloomberg's Equality Summit is underway. So we're going to hear from Al Kelly, Visa CEO. That's coming up next. This is Bloomberg.
They're talking NFTs. Let's see what they actually have to say about NFTs here.
On the walls. I can project it on the walls in the future to have it absolutely safe and verifiable. You can't even do that with Michelangelo's.
Yeah, Alexander, it's a good call here. We do need local production. Yeah, just comes down to cost, though. It's so freaking cheap to manufacture these wafers and circuits overseas. It's almost like such a commoditized product, like wafer boards and these components. That why, in some cases, why make them local? Like, just let them double up.
And value.
But yeah, times like this makes you want them local.
It does. Absolutely verifiable, totally unique, one of a kind, brand new form of art. I get it. I do understand it.
Yay.
I'm just surprised at $69 million for something I cannot hang on my wall. It's as simple as that.
Right.
All right, Susan, stay right there. A lot more from you coming up. And yes, it is St. Patrick's Day. And guess what? We're celebrating with the acting head of William Grant & Sons. They're the maker of Tullamore Dew, an Irish whiskey. We're going to have him on the show next hour. He's not bringing samples at this time of day, at least. We'll be back.
Uh-oh, gonna get demonetized for that. You can't just start playing Taylor Swift here. You know how fast you get demoned, you play Taylor Swift? Oh, man. So this is like literally Fox trying to punish me here. Woo! All right, let's see if there are any top stories here. Taylor Swift canceled our tickets, too, that we got for... I think she was supposed to have a concert this year. Pretty sure it was this year. We've been to all of them. But yeah, anyway. All right, what else do we have here? What's KKR SPAC friend? Okay, well, let's see what the story is. KKR, first SPAC from private equity giant KKR. Okay. Opened its debut session on Wednesday. What's their target? Consumer and retail industries. Boring. Okay. What else? Crude. Yeah, there's a lot of talk about oil and gas prices skyrocketing. Folks, we're just going to turn on the wells again. So much supply is going to come. Oh, wow. Thank you for the $100 shout out. That's really awesome. Thanks for that. Appreciate that. So, all right. Let's see. Chip maker isn't chip shortage isn't personal. Central bankers have lost the plot on messaging. Okay, let's hear this opinion. So here's a Bloomberg opinion piece. Let's see what we got here. It's a big week for central banks. My plea is that they keep it simple. Central bank messaging really doesn't have to be as difficult as it has become lately, with a plethora of jargon-infected initiatives adding to investors' pain. I don't know about that. Honestly, I feel like Jerome's been very, very clear. It's just we have these expectations that don't align with their goals, which, the expectation, like the hope rather, is that we want them to print more money, more than they already are. And they're like, no, we're good. Seems pretty clear to me. ECB meeting last week was a perfect example of what to do. Okay, let's hear it. The initial statement provided all the reassurance the markets wanted. The pace of the ECB's pandemic quantitative easing program would be significantly raised. Exactly. But again, the ECB said we're going to print more money. That's what the markets wanted. This has nothing to do with verbiage. It has to do with actions, bro. Actions. The ECB said, okay, markets, okay. You win. More printing. There's nothing to do with what they're saying. It has to do with the fact that they said they're going to print more. How hard is that? This, okay, let's see here. Blah, blah, blah. More Hawkins. Okay. All right. Yeah, all right. I'm kind of bored of that article. Let's keep going here. So, let's look at the sticks. Man, Plug's just getting smoked. But a lot of things. Why Zillow? Why would Zillow be getting smoked now too? Just everything. These really good companies just getting destroyed right now. And it's fine. It just creates dip buying opportunities. It's just frustrating because you can run out of money quickly when these dips come so close together. Right? So, but hey, that's what happens. Okay, these guys are back up to about 4%. GameStop and cost still below their open leap, or the leap that they had at open, but yeah, still got. It looks like we're not seeing as many green stocks anymore. Possibly another little pullback within the day here. What's your Fox alert here? Oh, yeah, the spa shooting. That was sad. Tesla back to negative here. Let's jump back to CNBC. Yeah, what a swing on Tesla. Goes green, back to negative. Canopy, 0.5%. Dropbox, negative. Target, negative. Wayfair, Canoe was up almost at $16 here. And all of a sudden, back to the gutter you go. You don't belong here. Only the airlines belong in the green. You go back to the gutter. Disney's down today too. So everybody's freaking out. Everyone. Redfin, 4%. Why? No, it's just because. Is there a reason Tattooed Chef is down 4%? No. Is there a reason the firm is down 4%? No. Just Fed anxiety. That's it. It's not like these companies changed anything here. Palantir, nope. All right. What else? Let's see. Bloomberg. What are y'all talking about over here? What you got?
Friends knock things off their bucket list that they want to play. They want to visit events they want to go to. But I think that we will see an increasingly positive environment as we get into the second half of the year. But we must all remain vigilant. All of the mask wearing, social distancing really does.
Okay, mostly political here. But masks, which I know that sounds, it's like, why are masks politicized? Well, even just talking about why they are or are not has become political. Okay. The Techno Kaiser. Look at this opinion piece. They're going to talk about Volkswagen. Yep. Volkswagen is realistic about the threat. the Techno Kaiser instead of the Techno King. We'll see. We'll see if Volkswagen can do it. I mean, I'm sure they'll. I mean, we know they're going to try. We'll give them credit for that. All right, let's look at the charts here quickly. Not the sticks, but for a moment. Yields, a little bit of a return here, 0.8445 on the 10. I'm sorry, on the 5. And the 10's at 1.66 again. See that? Yeah. Oh, and moving up. I think that's causing a little bit of that green we saw at like Tesla, for example, to evaporate again. Oh man, this is it's rough. It's not easy today. And I think probably the best thing to do is for the next 3 hours, just go on a walk, go chill, and see if we're gonna go doing some big old dip buying in about 3.5 hours. When we get the statement, Jerome Powell start talking, we'll see. But in the meantime, make sure to take advantage of that coupon code. I'm going to put up on screen, by the way, a redirect for the Fed Reserve live stream. So make sure you click remind on that. So that'll pop up in a moment, or go to metkevin.com/FedSpeaks. But yes, this coupon code is extended for probably, I'm thinking, to the 19th when the last stim checks come in for direct deposits. But anyway, check that out. Link down below. Thank you so much for being here, folks. We'll see you later with Drapo.